Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today, we're diving into Binah Capital Group's latest report. Will their financial results leave us seeing double, or will it be a clear picture of their future? Let's find out. This report is basically a quick snapshot of their performance, like a financial selfie, if you will. We'll focus on what's important, the numbers that tell the real story. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Scroll Form Scroll, this is a Form 8K filing. A current report that companies use to announce big news or events to investors. Think of it as a corporate breaking news alert. This one is dated May 15, 2025, so it's pretty recent. Scroll item 2.02, results of operations and financial condition. And scroll, as the main point of this 8K is to share Binah Capital Group's financial results for the first quarter that ended in March of 2025. They put out a press release, and this filing makes it official with the Securities and Exchange Commission, or SEC. So basically, it is a way of releasing information about how their business is going. Now let's get to the meat of the filing, the exhibits, specifically Exhibit 99.1, which is the press release with all the juicy financial details. We want to see the real numbers, the specific figures, so we know what is going on. The press release highlights their first quarter results for 2025. This is where we start to see if the company is making money, losing money, or just breaking even. Okay, let's talk numbers. Their revenue, the money they brought in from sales, dropped significantly. It went down to only making $14 compared to $1.3 million in the same quarter last year. That's a huge drop, like losing more than 90% of their income. To put it simply, it means for every $10 they made before, they are now only making less than $1. The cost of revenues, meaning how much it costs them to deliver whatever service or product they sell, also decreased to $0 $1 million. So it seems they're producing less, which would make sense considering they are getting much less money than before. General and administrative expenses, the costs of running the business day to day, like salaries and office expenses, actually went up to $2.4 million. That means they are spending more money on running the company despite making way less money than they did before. That's generally not a good sign, because ideally you want your administrative costs to go down, or at least stay stable as your revenue goes down, but that's not what's happening here. Research and development expenses, how much they spend on creating new things or improving what they already have, went down to $0 $80 million. This could mean they are focusing less on innovation, which could hurt them later on if they don't keep up with the market. The net loss, how much money the company lost overall, went up to $3 $2 million. Ouch! This is a bigger loss than last year, which means they are further away from making a profit. Cash equivalents and restricted cash, which is basically all the liquid money they have, totaled $3.3 million. It's good that they have some cash, but with the amount of money they are losing, they need to start making profit, or that cash pile will eventually be gone. Management says they are happy with the progress they are making. They talk about deals with big companies like Microsoft and how they are working with Google Cloud. But the numbers don't lie. While they may be excited about partnerships, the financials tell a different story. If you wanted to know more, you could join their conference call to ask questions. But honestly, most of what you would hear would be corporate speak, a lot of jargon and positive spin. The important stuff is in the numbers. So what's the big picture here? Well, Binah Capital Group is facing some serious challenges. Their revenue has plummeted and their losses are growing. They are spending a lot more to run the business while making much less money. While they are talking about new partnerships and opportunities, the hard numbers suggest that they are in a tough spot right now. The company's direction seems uncertain. On the one hand, they are making deals with big names which could lead to future growth. On the other hand, their current financial situation is really concerning. One big risk is that they run out of money if they don't turn things around quickly. They need to either cut costs drastically or find a way to boost revenue. An opportunity would be if these partnerships with Microsoft and Google Cloud actually start generating significant income. In conclusion, Binah Capital Group has a long road ahead of them. Their partnerships show promise, but they need to fix their financial problems fast. It's a classic case of potential versus reality. Alright, that's our breakdown of Binah Capital Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.